Okay, so now let me introduce our panelists. Our first panelist is the Managing Director of Colliers International Philippines. Let me welcome Mr. Richard Raymundo. Richard.
Hi, good morning.
Hi, good morning, Richard.
Hi.
Okay. We also have with us our Director for Office Services, Tenant Representation. Please welcome Mr. Dom Fredrick Andaya. Dom. Hi, Dom. Dom, I think your mic is muted.
Is it working?
He's still muted. Okay, there. Dom.
There you go. Thank
Okay,
you,
that's
Thea.
fine. That's fine.
Okay. So
Okay.
let's start with the
New
questions.
normal again. All right. So while I'm giving Joey a little break, so I'll ask you guys a couple of questions. So feel free, or any one of you, to jump in and answer. So right now, companies are looking forward due to this pandemic. When are you expecting, or when are we expecting to see a recovery in the office market? Will the expansion to cities outside Manila and Luzon be part of the occupiers' business continuity plans moving forward?
No.
Tom, would you like to take the first crack?
Okay. So it's difficult to assess when's the end of this pandemic. I mean, even the most advanced economies are having hard time controlling it. What they're saying is that the most definitive indicator of the end of this is when the vaccine will become available. They're saying it will be available in 12 to 18 months. So I think that's in line with our projections as presented by Joey. But the thing is, we could not be paralyzed by the situation. I mean, the presentation showed a lot of opportunities even during this difficult period. And what we want to tell our clients and partners is that we need to take incremental decisions during this period. Information in terms of what's going to happen, what will be the returns, will not be available. But again, we need to take decisions, and here we are showing you what the data say and what the opportunities lie. By taking actions, by taking incremental actions during this period, we might see a rebound sooner rather than later, and we would avoid worst case scenarios.
Do you think, you mentioned a rebound, do you think that that rebound includes expansion plans to cities outside Metro Manila and Luzon? And do you think which
Definitely,
cities will benefit?
definitely, there will be movements. So BCP prior to COVID includes or included redundancy in terms of locations. That will still continue. So um, we will see expansions outside of Metro Manila. That's also the thrust that the government is proposing at the moment. But of course, the cities that will benefit, those that will depend on the readiness of the cities in terms of infrastructure and healthcare capacity.
Thanks, Dom. Richard, would you like to weigh in on Dom's comments?
Remember, we were talking about this about a week ago. What was interesting that there are companies right now which are looking at spreading out their offices. Remember, there was one that you were talking about wherein they want to have an office in the north and one in the south, so that if something happens like this, that their workforce is geographically diverse. So it won't be difficult for them to just to go to one office. So that could be one interesting trend that we're gonna see after this one, which is still part of the BCP of companies.
Okay. I'll go to the questions from the floor. Here we go. This is a catchphrase that we've been using since we started the webinar. This is from Sam Peterson. Will new normal environment drive more need for BPO? So this is again related to the office market.
So okay, I'll take that. So
Okay.
BPOs thrive because of cost pressures. And because of this COVID, doing business will even become more expensive. And that's applicable globally. So with this one, there will be more cost pressures. Of course, there's technology solutions to address cost pressures, but outsourcing remains to be an effective way of addressing cost pressures. So yes, there will be um, a pause in terms of outsourcing initially because companies and supply chains are disrupted, demand has slowed down, but we would see another surge of outsourcing eventually in the next several months, similar
Mhm.
to what happened post the global financial crisis.
Okay, connected to that, we have another question from the floor from Mark Bello. Are BPOs likely to downscale or slow down expansion due to greater adoption of work from home arrangements?
Okay, so prior to COVID, work from home is something that was frowned upon by the clients of the BPOs. It was not effective before, but because of COVID, BPOs were forced to do work from home, and we are getting positive responses from BPOs saying that they're able to elevate the quality of the service by the agents that are working from home. So I think moving forward, work from home will become part of the menu of services of BPOs. And what's that? What's last question? Yeah.
The last question is sorry.
So it will become part of the new normal.
Yes,
And
yes, right. That was the last
I
question.
initially, will it cause the next question? I think will it cause space reduction?
Mm.
Um, well, there's technology already causing space reduction. Work from home may be a small dent in terms of the work from home, but with the social distancing requirement right now, densities of 5 to 6 square meters per person will now increase to around 8 to 10, which was the normal prior to the more dense practices of BPOs. So
Mhm.
there will be pluses and minuses. I think it will even out with the technology and work from home solutions from BPOs.
Yeah, and I
Yeah.
think
Okay.
it will also depend on like the heat map that was presented by Joey is what sector you're in. So, obviously, if you're in the travel sector right now, if you're a BPO, that would be a bit more difficult. But if you're a BPO on financial and probably on pharmaceutical, on the cooler end of that heat map, then you're better positioned. As Dom mentioned, is I think the question of the new normal will be on the density. How will that density look like after this? Are they still going to do the 5 to 6 square meters per person? Another one is technology. BPOs use desktops. A lot of the BPOs use desktops. When this happened, it was very difficult for these BPOs to all of a sudden work from home. Some even brought home their desktops. So will there be a shift to laptops now for BPO? So that's going to be interesting moving forward after this.
Okay, so let's jump off from the BPO. So another thing that drove the real estate development around BPOs is the townships or integrated communities. So this question is from Katrina Tantoco Lobregat. What will the demand be for townships and integrated communities moving forward from this pandemic?
I think as Joey mentioned, there'll be more emphasis now on townships, more integration. People are now realizing that if I am now living in a standalone condominium without any support supermarket or banks or anything or a convenience store, that will make you think afterwards, is this
Mm.
the right living arrangement for me? And then that's the same for outside of Manila, the townships wherein, there are single detached housing which is integrated with other retail and all of that, as against, let's say, a subdivision without any support facility. That will now put into question, am I in the right type of development? And I guess for developers who are very good at this type of projects, this is the time for them to really go out in the market and say, this model works. This type of development is what you would want to be living in.
Yes, I
Okay.
think convenience will
Go ahead.
really be, convenience will really be a key factor moving forward. In fact, I've spoken with some brokers, and according to them, the condo units that are located within townships or estates or integrated communities are still receiving queries, even
Yes.
during this pandemic and the lockdown. So that should be a major consideration for buyers as well as developers going forward.
Katrina sent another question connected to that. Do you think that there will be a move out of the city for live, work, and play as a result of this pandemic? And how fast or how slow are we expecting it to be?
I would say it depends. People with families might be rethinking, wherein, is it better to live in a condo, or is it now better to live a little bit suburban for people with families? But then on the other end of the spectrum,
Mm.
for newlywed couples or singles or really young millennials who like this idea of being in the city, that could be on the other end. So I would say that depends on the market. But whether you're a full nester or you're an early nester, so that would be a different decision.
Okay. Richard, following that, so we're talking about, condominiums, vertical developments, but Maria Avon Manankil would like to ask if the impact will also be significantly different for the horizontal segment of the residential market, especially outside Metro Manila.
I think the impact would be bigger on the condominium, because your condominium has a bigger proportion of investors or speculators. Once you go into the housing market, the 3 to 6 million single detached units, that is more of an end user type of demand. The thing to look out for in the housing market, as Joey mentioned, is watch out for indicators such as OFW remittance, because OFW remittance, I think I remember it right, as Joey mentioned, is about a quarter of the OFW remittance goes to housing. Another one is the interest rates. Is to look into that, and the unemployment, because that could derail your demand for end use. But on the speculative type of condominiums, I would say the effect on the price drops would be a bit bigger on the condominiums rather than the end use type of housing.
Okay. We do have another question about, I think this would be on the office market. Dom, if you'd like to take this. So there are at least 72 eco zones awaiting PEZA proclamation. Do we see any urgency to fast track the approval? And how aggressive do you think the BPO companies and potential locators really feel about expanding to provinces?
Okay, so I mean, the reason why the government held off on the approvals of PEZA is because they are considered now as a maturing industry, and they're so big enough. They are able to operate already without, or as the government thought, without the incentives. But given this pandemic, I think the government now or should be rethinking their position about the moratorium in Metro Manila and the slow approval of PESA, because BPOs, as I've said earlier, we are expecting a second wave of or a surge of expansions after this. So we are hoping that the government will rethink their position and start approving um, the PESA of these spending applications to encourage more BPOs from expanding.
Okay.
Yes, I'd just like to add, Thea, to what Dom mentioned. As I mentioned, we only have what 400,000 square meters of PESA proclaimed space spread over 3 years. So that is not a significant amount. In fact, that can easily be taken up in a year or two. So there's really a need to further expand available PESA space. And if we really want to attract more BPO locators now that we're seeing a softer demand in the market, then that is probably one way to help prop up demand in the office market.
That's correct, Joey, because this pandemic will cause unemployment to increase. Even though the government will not generate as much revenues from further encouraging BPO expansions, but the BPO industry will definitely help pump up the economy in terms of spending and hiring people.
Okay. Connected to that, do you think that this is from Ayla Gomez? Do you think that Cebu or other provincial cities, do you think they will fare, how they will fare for the office sector post COVID? The office sectors for these provincial cities, will it be the same percentage in reduction in rental rates as Metro Manila?
Um, well, I I believe so. Cebu is like a smaller Metro Manila, and they are highly dependent on the BPOs. So we would expect rental corrections in the same magnitude as what we will see in Metro Manila.
Okay.
And
Now we're
also, yeah, I just want to add, no, one key driver of office demand in Cebu that we're seeing is the English as a secondary language. In fact, we're looking at this segment closely now because previously, according to our colleagues from Cebu, what the companies in Cebu would do is they will have the students in Cebu and they will be staying in hotel or in a condo and they will be undergoing an intensive 2 month English training program. So there's still, physical connection. But now that we have this travel restrictions, will the demand for office space now serving ESLs increase? Because the demand for this service will also be greater because of this travel restriction. So that is one segment that is worth looking into.
okay. There's an interesting question from Cherry Ann Mata. This is concerning REITs. So that has gained a lot of traction in 2019, but do we see REITs gaining traction in the short term and possibly augment the property sector recovery?
It's all about pricing right now in the stock market. So you saw the stock market index uh, reach a low of, I think, an intraday of about 4,000, the index level. It's now at around playing at around 5,000 to 5,500 level.
Hmm.
Uh, it's going to be about the pricing for the REIT. If you look at the property companies right now, they are at a very attractive price as a discount to their net asset value. So it would be interesting if uh, in general, if there will be any IPOs in the short term. I think it's a bit unsure right now for IPOs, given the
Mhm.
pricing in the market.
Okay. I think let's talk about retail this time. We've talked about the residential market and the office market very heavily. Um, Based on the report earlier, we are seeing a tumultuous retail market for 2020. Do you see a recovery in 2021? And what factors do you see will help uplift the retail market aside from the recommended shift to online selling?
Well, similar to what I mentioned earlier, Thea, we are likely to see a recovery, but it will be a U-shaped recovery, so a slower recovery. In fact, even in terms of retail lease rates, if that is an indicator that we need to consider, we're projecting what, negative 5%. So that's a contraction for 2020. It's only in 2022 where we are likely to see a positive 1% increase in terms of rental lease rates. But if you're asking which indicators are likely to help uplift the retail segment, of course you have the domestic consumption. And what drives domestic consumption? You have OFW remittances. If we are to see a $3 to $6 billion drop this year, that will be huge in terms of purchasing power. Note that the consumer spending accounts for about 60% of the Philippine economy. And if you further dissect that consumer spending, about 40% of that is covered by food and beverage. So that will really have an significant impact in terms of retail demand all over Metro Manila. But I think there are also some positives. Of course, interest rates remain low, and also aside from the shift to offline to online strategies, what would also work is for retailers, small operators, to tie up more aggressively with the providers of delivery services, with logistics companies. And also there's some policy recommendations that or reforms that might benefit also, because as you see over the past few years, there has been an aggressive influx of foreign food and beverage operators here. So that is one positive that we see, especially if the government approves this bill, which calls for the further relaxation of Retail Trade Act. So that should help prop up the retail segment in the near to medium term.
Yeah, I
Okay, I
agree
think
with
we have.
Joey.
Go ahead.
I think it's really depending on which sector you're at. Definitely, the F&B uh, will quickly recover faster than, let's say, cinema or a food court setting. So that would be an interesting one. It's not going to be a V-shaped recovery. It's going to be a U-shaped recovery. So I doubt it's going to happen this year. Another factor to consider is um, holiday spending might be weak in December because remember when this all happened, the government suggested that employers advance the 13th month pay of
Correct.
employees, and that's normally spent in December, in November and December during the holiday season. So that will have some effect on spending come the fourth quarter.
Okay. I think we have time for just one last question. Can we give a comment on the government statement that key infrastructure projects will continue construction despite the lockdown? And how will this impact the property market beyond the pandemic?
Okay. I think the
Go ahead.
government already announced, that even with the finance department, budget department trying to allocate funds for the government social amelioration program, as well as financial support from SMEs to keep them afloat, one key driver of the economy will still be the infrastructure development. And the government, the Department of Public Works and Highways mentioned that its spending on infrastructure projects will not be affected. I think one tack that the government is looking at is further expanding or strengthening its public-private partnership program, so that the government can focus its funds in terms of providing relief program to the most affected segments of the population. So the funds that will now be scouted or used to fund these infrastructure projects will come from the private sector. So I think this is one key development or program of the government, wherein there should be a stronger public-private partnership between the government as well as private developers and infrastructure implementers.
Thank you,
Agree.
Joey.
So if as Joey said, if personal consumption expenditure would be a bit softer this year, then government expenditure needs to come in, and I think the government has will identify the really key projects that needs to be prioritized, and that will bring about employment, and employment is what is needed to jumpstart the economy again. um, after we get out of this quarantine.
Okay, I think that's our last question. Richard, would you have a final statement for our audience?
I'd just like to thank everyone who joined us. We are at a new normal right now in real estate. Everyone's adjusting, all sectors are adjusting, both on the hard side or the physical space, and also on the soft side, meaning how it's managed, how property is planned. Um, just remember, for every crisis, there is an opportunity. Um, with the past crisis, like the Asian financial crisis and the global financial crisis, developers and investors who were agile and who were looking forward were the ones that really survived. So we would like to have more meaningful conversations with our clients, stakeholders, and friends. And hopefully, this information would help you to go through unsure times during the crisis. So I'd just like to say to everyone, um, stay safe and keep healthy.
Thank you, Richard. And thank you, Dom and Joey, for joining our panel today. This ends our property briefing for the first quarter of 2020. Thank you again to the Philippine Daily Inquirer and Inquirer Property for being our media partner for this event. We hope that you were able to gain valuable insights, especially during this challenging time. And you're welcome to reach out to our team if you have further questions or would like more information. So, on behalf of Colliers International Philippines, thank you for being with us today. Stay safe, stay healthy. Goodbye, everyone. Goodbye, guys.
Bye.